Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Happy end of month Monday. So we do have some shenanigans as we wrap up this first month, and what a roller coaster month it's been. Not that I can't say it's been my favorite, that's for sure. So I am happy to show January the door. If you've had a great January, awesome. If it's been sort of treading water, I'm with you. I think treading water is a very, very important skill. So there is that. And then in the meanwhile, we're looking forward to February. And, one of the things that is sort of refreshing, I think, for traders is a brand new month. Sometimes for day traders, it's a brand new day, just getting to work the process all over again and not getting down. For those of you that watch Ted Lasso, I just started getting into that this weekend. And my sister's been telling me to watch it for the better part of a year. And I just wanted a good show in the background while I was working up some charts. And so I put it on. And be a goldfish. For those of you that watch it, you know what I'm talking about. Be a goldfish. No memory. So I did like that. All right. As always, this show is about your questions. So get them typed in. We'll tackle them for the next 18 minutes here. All right. So kicking it off. Hey there, Peter. Does it make sense to trade futures before the U.S. market opens because there is less volatility, thus less risk of being stopped out? Well, I think that, Peter, in terms of pre-market, remember, yes, the volatility is narrower, but so is the liquidity. And to me, liquidity is probably as big an issue as low volatility, because the market may not go very far. And in that regard, if you're placing your stops, as we talk about, respecting historical volatility for them, then I think that's really, really important and helpful. I typically don't. That period of time between 4 a.m. Eastern and 7 a.m., think about it this way. The Asian markets have just closed. The UK and European markets are sort of waiting on the US market. If you want to trade pre-market, just avoid 4 to 7 or take a slightly longer term time horizon approach. Maybe focus on 7 to 9 and be aware of those 8:30 hot zones, those 8:30 data releases. But I don't believe it's necessarily a less chance of being stopped out, but based on historical volatility, barring any 8:30 hot zones, you can place your stops tighter as opposed to what you would have to do once the bell rings and the volatility expands. Okay, just be aware of the lower volume environment. All right, great question. Thank you, Peter. Mark, good morning. And scalping Forex markets, and I am waiting until after the New York Open, after 9 a.m. Yep, I'll tell you this, Mark, that same issue that I would say Peter would be dealing with, as a Forex trader, you won't be dealing with, because remember, the Forex center of the universe is Paris, Frankfurt, London. So you're not going to have necessarily the same kind of contraction depending on the different pairs that you're trading. So do you have to wait till 10 a.m. Eastern, 9, you mentioned Chicago time, after the opening range, after the clearing? I think if you're trading maybe yen, possibly Aussie, maybe Swiss, but Swissy and yen, I'd say, are going to be a little bit more sensitive to stocks, and it might make sense to wait. But I don't believe you really have to, Mark. Forex, liquidity, participation, the attention is very different than equities. Thanks for the question. All right, Greg, it looks like and I realize my head's cut off. I'll move the question in a moment. Greg mentioned it looks like the indices are coming up to Darvis resistance, but are not showing overbought on the slow stow. therefore sit on our hands. Am I reading the indicators correctly? Great question, Greg. So yeah, let's hop into it, shall we? So here is the S&P. Now, if I'm going to trade the S&P via SPX or SPY, I am still going to be looking at ES futures, the ES contract. So are they coming down to resistance? Let me grab my handy dandy drawing tool here. All right, so here we go. Are we coming down to resistance? So the Darvis is saying yes. Thank you, Darvis, right? All I'm doing, gang, is I'm extending the lines that the Darvis 2.0, which of course you can download for free at the Countdown Trader, or if you're a member of one of our simpler trading rooms, options room, futures room, the mastery, of course, my mastery, sector secrets mastery, I've shared a toss.mx link where if you open that up, my settings, colors, indicators for the free tops layout is on a PDF. You can check that out in the respective room drives. But yeah, I think this is largely, you guessed it, I think this is largely support. And then take a look here. Once we know we're dealing with CHOP, how do we know we're dealing with CHOP? Well, you can look at the trend neutral trade flag. I like the JT multi lower row, right? And then now, yeah, we have the support of the slow stow. Now, remember, I'm not doing this on the NAS. This would be, as far as the three main indices go, it'd be the Dow, it'd be the S&P, but why not the NAS? Why not the NAS? Well, take a look. That right there. I don't care about the slow stow in an environment where we have a downtrend. We're south of the 200 propulsion, steady string of red grab candles. There's a lot here telling me that if we can get especially back to the 200 resistance, if we can get to the 21 resistance, if we can get back up into the wave resistance, I want to short the rip, gang. We are in short the rip mode. All right, we are in short the rip mode. So that's what I'm looking at there. So make sure, please, this, what I'm teaching you here with the JT multi, whether you have the trade flag or whether you have the JT multi history, they're reading the same thing. They're the same process. One just shows you the history, so it's a little bit more useful. But having knowledge of what's going on the hard right edge right there, when we're red over red, that environment is going to dictate everything you do. That environment should say, if you're looking still for some sort of resistance level, great, that's going to be a short. If you're a trend follower to the downside, you want a shorter rip. So that structure is not going to supplant any other indicator or process that you have. It simply won't. What it will do is increase the accuracy of that tool and of that analysis. So thanks for the question, Greg. Great question. All right, next up, how you doing there, Bobby? Do I watch the put call ratio for guidance on market decisions? Bobby, when I say yes or no, it's not by any means that it doesn't work. It just isn't something that I consult. So no, I really don't care. Put call ratio, no. Now, that's just me, right? Some people like mayonnaise on their hamburgers. So it's just not for me. I will look at, and I did a pretty thorough walkthrough of the zones of the VIX. I like to look at the yen. I like to look at the franc. I'll look at the currency layout. I'll take a look at the VIX, which is a futures contract here. And, I'll start to identify where we can expect higher volatility. One thing I'll mention, here's the Darvis 2.0 and the VIX. I'd love to see us get back down below 27.5, where things will get a little more normal. If we can get in this area, look, I'm just extending over the Darvis, right? We can get in this area in here, we can probably put the Dramamine back in the medicine cabinet. All right. So that's what I look at. No, but no, I don't. And it doesn't mean it's not helpful. It just isn't. A lot of tools like market internals, I don't believe are necessarily always good timing tools. I think the tick might be the exception to that. Tick is probably a very quick, almost scalp or momentum based timing tool, but it's quick. It's really, really quick. Other market internals are more environment, kind of along the lines, well, here, I'll tell you right now, kind of along the lines of the structure of the market. That neutral trend is not going to tell me when to do something, but it's going to give me a little bit more idea of what I'd like to do when I get the right timing. So the put call is probably a good way to me, not for timing, but for a general market environment, right? It's kind of like the weatherman, saying, hey, it's probably going to rain today, but they're not going to tell us what time. There's a likelihood for something to happen. So it's an environmental measure, if that makes sense, Bobby. Thanks for the question. Is CL going to 90? I don't know. I don't know. It's pretty darn well. Look, do I ever know where a market's going to go? No, and we know that nobody does. However, to your point, Jimmy, we have this is the 813 propulsion setting, one of the free tools that I make available over at countdowntrader.com. That's on. That's akin to the foot on the gas pedal, right? We have a nice upward slope of the wave. Gotta love that. What else do we have? Oh, structure, bullish structure. So the path of least resistance with this, which is the only thing that I can say with some confidence, is up. And we're within striking distance of 90. So let me use another tool. Do I have this up right now? Let me show you another tool that I like to use to see if we're within striking distance and how long it could take, right? Always using high probability, never certainty. It's fishing, not catching, right? So take a look here at the daily price movement range of crude. Crude is capable of, that's the bottom line is crude capable of closing the distance from where we were, 87 and a half to 90? Is it capable of that? That's 2.5 points, right? Yeah, absolutely capable of it. Just take a look at the typical price movement range for Monday. It's capable. Yeah, it's there's enough capacity in that tank to go 2.5 points. Now, well, whether or not those 2.5 points will move higher, that's a whole other conversation, but it's capable of it. Yes. So that's the way I look at probabilities, Jimmy. I appreciate the question. All right, moving on. Ronaldo, I do appreciate that. I've got my, I don't know if y'all can see this. I've got my Hulk. There we go. I don't know if you can see that. Got my Hulk smash watch. I love this watch. I love the Hulk. Yeah, give me a good, yeah, definitely. If we're heading in the right direction, if this has been helpful, yeah, for sure. Hulk smash that button. I appreciate that, Ronaldo. All right, next up is thoughts on IAK insurance looks. Oh, yeah. So let's take a look at the KIE. That's your insurance group. It's increasingly looking. Thank you, Darvis. Thank you, Darvis again. And, take a look back just a little bit right here. Again, thank you, Darvis. Nice zone. Are we quite oversold yet? No. Please don't wait on an arrow. I know we love our arrows and signals, but please don't wait on it. The closer we get to the 20, oversold and stochastic. Look, there's a reason that David has ready, aim, fire, right? Ready, aim, fire. Ready, steady, go. However you want to look at it. As we're closing in, as that stochastic slopes down closer and closer and closer to 20, in a chop, we're getting closer and closer and closer to the floor. The Darvis is just helping us identify where that floor is. And then we're just asking the stochastic, do you agree? It's just a simple question. It's not an end all be all, but it's nice to know that there's a stacked confirmation. Reaching the floor, ready and fire, slow stow. That's the process. So if KIE is getting down there, depending on the weighting of some of the stocks within KIE, Traveler, that's a relative outperformer. In fact, while it's not green over green, that is getting achingly close to looking like a precursor to an uptrend. I'd like to see 1, 2, 3, 4, 5, 6, 7. Oh gosh, we're right on the edge. And we have been probably since the 19th of an aggressive tops, grab, and propulsion defined uptrend. Look at the support in the wave as we get more green grab candles and as we're above the 200 propulsion and as that wave has more of that angle that I used to call 12 to 2, right? If you look at a watch and think about what 12 to 2 o'clock is, that's a nice angle on that uptrend. It's not quite a trend yet, so be aware. In front of 170 might be a little toppy, but we're not going to buy there anyways. Send it on back down to the wave. But I like TR. Yeah, I like that very much, Sean. And then PGR. Well, this one, my friend, is, and I haven't looked at this, but what a gorgeous structure. Wow. Double green has been since the middle of December. Boom, right? And then, by the way, again, let me just mention, if you're in the options room, futures room, or the Sector Secrets Mastery, I have this layout shared with you all. All right. So the free tools that have been available, we've got it on there. Open it up. You're good to go. I've got a couple premium tools here, but not that many. So do check that out, especially for those of you that have been asking for this thing and for this thing. All right. Also, and for my settings on the slow still, which by the way is built into TOS. So I want this PGR, Sean, gorgeous. Yeah. We can't buy the pullbacks the 21 anymore because those dots have disappeared, but it was valid right up until the 26th. Got to get down to the wave. Awesome. When the markets are in double green, I don't care what an oscillator has to say. I don't care what overbought, oversold tools have to say, because we're not in an overbought, oversold environment. We're in the buy the dip. Double green, buy the dip. So thanks for the question. Really good eye. I like that one a lot. Sean, good stuff. XLP, Larry, there's a lot to like about XLP, just not XLP. So XLP gets us looking in a certain direction, right? XLP gets us looking at staples. And then let me share this with you all. Oh, you know what? Heads up. Those of you that are here in the room, quite a few of us. I just got an update from the Lorna bot, who is the best, and she's going to be updating the file. So we have some of these free labels. So if you want a bunch of folks asked about the labels, that's fine. It's just giving you a read on the current 20 period CCI, 12.26.9 MACD, and then the 21.3 stochastic, and then the hard right edge of the Momo and trend. She's going to update that. So maybe today after the close or tomorrow. And you don't want to be running on a layout that you haven't at least had some time. Oh, actually, today in the close, I'll be doing the close in the options room today. And I'll be more than happy to walk through some of this. And then after the close, at that point, the Lorna bot will have the brand new layout for you all, just updating. And then you can give that a whirl the rest of the week after I walk it through with you all. And we'll do some analysis. But speaking of analysis, Larry, what I would say about XLP is I'm not crazy about XLP because, well, the structure isn't terrible. It's neutral on the trend, a little bearish on the Momo. What I do like within it, this is boats and tide, gang. This is boats and tide. Let me see. I'm trying to find, and we'll talk about this as well when I see you all, but I'm actually trying to open up. Give me one sec. We have a moment here. So I want to open up the XLP multi-chart because these same tools will help you understand the boats and tide approach that I use. There we go. Voila. Okay, so now all we have to do is look at XLP and then look at who the relative outperformers are. So that's what I would recommend. Do I like XLP? Not more than I like Coke, Philip Morris, Mondelez, and Altria. Make sure you know where we are in terms of the timeline to earnings. And that's the way I look at it. So Larry, I think there's some better stocks within the XLP versus going with XLP itself. And that's the boat. Sometimes the boats look better than the tide. There sometimes are often relative outperforming boats within a sector. All right, so let's get into Apple. Sure. Talk about boats and tide. This is a ship. It's a ship within the XLK, QQQ, SPY. And so choppy, yes. Is it my favorite within XLK? Probably not. I think XLK is struggling, so we definitely want a relative outperforming boat. But this reminds us, I've mentioned so many times, last week especially, it's a downtrend, agreed. Be careful when we get up into this area, the wave and the resistance of the Darvis. Boom. Gang, it does not matter what type of strategy you use. The Darvis 2.0, which, did I mention? Yeah. There is probably no better way, I can't think of a single way, to automate your support and resistance on your chart, because that area is going to be resistance. How easy is that to recognize, right? Structure, bearish. However, remember, and I know we've talked about this, when we're duking it out with the 200, please don't presume that we're going to keep moving lower, even with this, because the 200, it's a powerful thing. And until we have clear, resistance at the 200, you probably don't have enough of the sentiment shifting to bearish to justify really getting aggressive on a short. This would not be aggressive on a short, because here, let's say we get up into that resistance and all we do is just track back down to the 200. We can take profit at the 200, right? So I do like XLK. Just be careful. Apple has got to then fight the overall outgoing tide. And it very well might be a relative outperformer, but I would say, build out the XLK like this and make sure there's not a double green in there. There's not maybe something a little bit more neutral or stronger, Jim. But yeah, Apple's always something we need to keep an eye on. So absolutely. What time frames do I use for intraday? The 2, the 5, and the daily. This layout right there, Barry, is as much my day trading layout as it is the layout that I use when I'm end of day trading, 2, 5, and daily. Sometimes if I'm stretching the time horizon way out, I might go 5 daily weekly, but 2, 5 daily is usually what I'm looking at most of the time. All right, gang. And just like that, holy cow, there's so many questions still out there. Thank you all for being here for Charts and Coffee. It does sadden me when I don't get through all the questions with you all. But I know you all are getting ready to head into your respective rooms for the open. So I will see you all tomorrow. We do this 5 days a week. Of course, feel free to leave your questions or comments below in the comments area. If it was one that, Rog, I really would love an answer to this one, leave it there. I look at it. Trish looks at it. And you can leave a question in the comment area. Smash that Hulk smash, that like button. More importantly, leave a question or a comment. And I will see you tomorrow. All right. Same time, same station. Be good to each other, gang.